Hi everybody, Jamie Trull here, your favorite CPA, financial literacy coach, and profit strategist. And I wanted to give some important updates and tools that you can use if you have an EIDL loan. So we're talking about the loan portion. We're not talking about the advance in this video. This is about the actual economic injury disaster loan. Okay, so if that's you and you've taken out one of those, there are two important new things that have come up now in March of 2021. So you want to make sure that you're fully aware of these new developments. So two new things that might be good news to you. Number one, the original EIDL loan, if you look at your paperwork, was deferred for 1 year. Payments were deferred. Now, that still means interest is accruing. You just don't have to start payments for a full year from when you signed your paperwork. However, they have recently changed that. You now have, if you got your loan in 2020, you have 2 full years, 24 full months before payments start becoming due on your EIDL loan. So if you want to get out your paperwork, add another year to that payment date, okay? Now, again, interest is still going to accrue, so don't think this is a no-interest loan, and it will actually increase the amount of your monthly payment. Why? Well, because now you have a whole nother year of interest that's going to be accruing without any principal payments happening. So your principal balance is going to be higher, which means your interest is going to be higher, which means when you start paying down this loan, your balance is going to be higher and your payments therefore are going to be higher. So just something to be aware of. And I'm going to show you some tools at the end of this that I have for you if you want to estimate out what those payments are going to be or what the impact of maybe making early payments could be on your loan amount. Now, just to throw in here, also, if you have an EIDL loan that you got in 2021 related to COVID, okay, you are now deferred 18 months. So if you got your loan back in 2020, which most people did, then you have 24 months. If you got your loan in 2021, you have 18 months. Either way, payments are not going to start becoming due until 2022. Okay, so here's our second big update now. Not just the fact that you get this additional deferral on payments, but you may also be able to get more EIDL money, okay? More loan money if you need it. So this is because they've raised the caps. They recently now in March of 2021 have said the cap is no longer $150,000. It is now $500,000. You can actually get money for more operating expenses. It was previously limited to 6 months worth of operating expenses. Now it goes all the way up to 24 months of operating expenses. So that can be good news too, to be able to get additional amounts from your loan. Now remember, you still have to pay all this back. This is not a grant. This is not like PPP where it can be forgiven. That's really, really important to say. You're taking on actual money. So really think about whether you need this loan and if you need it for emergency reasons. This is not a loan that you take on to grow your business. This is not a loan to reinvest. This is a loan to keep you moving because COVID has significantly impacted your business. So you want to think about that. And you want to think about whether you really, really need this money and if you want to increase it. Now, you will not be, it looks like actually applying for that increase. It looks like it's one of those don't call us, we will call you situations. They look like they're going to be targeting around April 7th to make this effective. Now, does this mean it will be effective for everyone on April 7th? Probably not, as we have seen, but likely if you are eligible for a loan increase, they will likely reach out to you and tell you, and then you can decide whether or not you're going to take that increase or take some amount. Now remember, all the rules around if you have more than $25,000, now you have to put up collateral, things like that. So you want to make sure you're paying attention to all of those rules. Go watch my video. It's a really popular video from last year on what you can actually use EIDL for if you're trying to make a decision on this. But I want to make sure that you're aware of the fact that you may be able to get a second draw, is what I'm calling it. So a second draw on your loan, i.e. increasing your loan amount. Now, this will basically be added to your old loan. It's not a second loan. It's a second draw on the same loan. And so payments on that will begin at the same time that your payments begin on your other loan, okay? So that's just for you guys to think about. Now, I've got some tools, like I said, if you're trying to decide, okay, well, how much would taking on more increase my payment, right? What would that mean from a payment perspective? What would that mean from a total interest perspective? What if you're wanting to actually pay back some of that money? You don't want to take a second loan. You actually want to pay back some of it to reduce some of the interest that you're accruing right now. Maybe you didn't need all of it. Then I have a great tool for you. I've spent way too much time, an embarrassing amount of time, creating a amazing tool for you to use to be able to analyze all of that. So I have an EIDL calculator and tracker. So you can use it for two things. You can use it to calculate out your interest, do all this kind of scenario analysis around when you might want to pay back this loan, or if you make early payments. Let's say you want to make some additional amounts on your payments every single month to be able to pay it off faster. This will tell you how fast you can pay it off, how much it'll reduce your interest to do that. It will also let you add in the possibility of getting that second draw and what that does to your payments and what that does to your interest. So I wanted you to be able to kind of play around with this tool to help you in making decisions on what you want to do with this EIDL loan and what makes sense to you. You can also use it, like I said, it's a tracker as well. So even if you don't want a second draw and even if you don't want to make any early payments, you can still use this to track all the expenses that you're paying with your EIDL loan. And I do recommend you do that because remember, in everything that you signed, you said, hey SBA, you can come and audit this at any point, and they can look and ask you for what you spent the money on to make sure that it was for things that are eligible to be spent on EIDL money on. Okay, so that is really, really important. So let me show you this spreadsheet. I'm just going to give you a quick tutorial of it. It's really, really easy to use. I know it looks a little intense when you first jump in here, but let me tell you, there's only a few things that you actually need to fill out, and the rest magically will fill out for you. So I am going to jump in there right now. Okay, so now we are looking at the EIDL interest and payoff summary. This is part of my calculator and tracker. So we have a tab that's going to give you instructions that you can look at, or you can rewatch this video, but this is going to be the main thing that you need to fill out. And you only need to fill out the things that are in yellow, okay? Don't worry about anything else. Everything else is a formula. It actually won't even let you put anything into it because it doesn't want you to accidentally mess up the formulas. So you are going to put in just the amounts in yellow. So you're going to put in your date of your note. Let's say in this case, we had a $20,000 note on 6/1/2020. And for most people, it's going to be 3.75 unless you're a nonprofit from an interest rate perspective. You do not have to put in your payment amounts, your monthly payments, because this will automatically estimate them. Now, important to note, all of this is estimates, but they're pretty dang close, and they'll be able to give you a good indication of where you could end up. So don't use this as the gospel. This is not something that you're going to use as in replace of a loan statement. You're going to want to actually check your actual loan balances and interest balances, but this is going to give you a really good indication of what they're going to look like in different scenarios. So we put all this in. Right now we're going to leave this at 0, but if you decided after the 2-year deferral period that when you started making payments, you wanted to make a little bit extra each month, you could put something in here. But let me just show you a little bit before I even get into some of the scenario analysis that you can do. So you're going to come down, you're going to see your loan summary. It's going to estimate out your monthly payments, right? Right now, because we're not making those, because we put 0 here, these are going to be the same. And because we haven't put in any early payments, all these numbers are going to match right now. But ultimately, it's going to tell you your total interest accrued during that deferral period. So remember, even though you don't have payments for 2 years, you're still accruing interest. So we're showing that. And then the total interest over the loan term. So if you keep that thing for 30 years, this $20,000 loan is going to cost you an extra roughly $15,000. So you borrowed 20, you're going to have to pay back around $35,000 over a period of 30 years. That is how interest works, unfortunately. We can't avoid it. So I just think it's useful because even though this interest rate is low, the total dollar amount might be a little surprising to you for how much loan interest actually does accrue over this amount of time. So it'll also tell you your payoff dates. Again, right now, these are the same because they're just going to be a straight 30 years because we're not putting in any early payments. So, and then we'll get to down here in just a minute. So over here, if you did want to do, let's say, early payments, maybe you said, okay, well, what if I paid an extra, $30 a month for each month after that deferral period. It's going to tell you, okay, now you're only paying, instead of $15,000, you're paying about $10,000 in interest. That just saved you $5,000 by paying that extra $30 a month on your payments when your payments become due. Okay, so instead of $103, you're going to pay $133, and it is going to help you pay that loan down faster. And look, now it's paid off in 20 years. So you can play around with this a little bit and see, like, okay, if I wanted to pay it off in 10 years, what would I have to put down on this loan to be able to do that, right? So you can kind of play around with these numbers and see what they tell you. The other thing that you can do, let's say during the 24-month period, at this point right now, maybe when you're watching this video, your loan payments perhaps are not due yet, and you're saying, hey, I actually didn't need all this. I didn't even use $5,000 of this money, and it's just sitting there accruing interest. How much can I save? So if, let's say you're watching this in June, and you decide, okay, what if I made a $5,000 payment on this loan? So this is for early payments. You just pick the month you're making the early payment, put 0 in all the other months, and it's going to do the calculations for you. So you can see that now all of a sudden these amounts have changed. So again, we are now going to under $8,000. We're saving about half of our interest if we pay down this $5,000 now rather than waiting, right? That's a pretty big savings. So especially if that money is just sitting there not doing anything and you don't think that you're going to need it, you might want to think about paying some of that back for the interest savings. And it'll also lower the amount of years it will take you to pay off that loan. So you can play around with this and decide if it makes sense for you to make early payments. Of course, you need to think about whether you want to keep that money for potential rainy days. If you're worried about making sure you have some emergency money, then maybe you need to think about that. But I do want people to be informed as to the amount of interest that they are going to have to pay back on these loans. Now, if we come over to the EIDL second draw, what does this mean? This is what I was talking about, where now some people may be eligible to increase the amount of their EIDL loan, okay? Essentially get another deposit of money that gets bucketed in with your original EIDL loan. So let's say that's you. Maybe you decided you did not want to make early payments, and in fact, you want to take out a little bit more. We're going to come in here in June and say maybe you take out another $10,000. Okay, it's not going to change anything here because this top box is just for the single draw. But this one down here is for your original draw plus an extra draw. So now you can see that if you took out another $10,000, okay, so if I put another $10,000 in here, that over here, it is going to increase your payment by about $50 right now per month. And you're going to see exactly what your interest payments are. So now instead of the $14,873 for the one draw, now your total interest payments are going to be $21,625, and you're going to be able to go from there. So like I said, you can play around with this and decide what scenarios make sense. Do you want to make extra payments after your 24-month deferral period when you start having payments due? Do you want to make a lump sum before your payments even start becoming due? Do you want to actually take out a second draw if you end up being eligible to do so? But you can play around with all kinds of scenarios within this worksheet. And then after you're done with that and you've made your decisions on what you want to do, like I said, the other thing that's really important is actually tracking where your money is going for your EIDL loan. This will make it so much easier if you're ever asked by the SBA or the IRS or anyone to be able to support where your loan money went. Okay, it is very much a possibility. I would expect that somebody at some point will ask to see that. So if you haven't been categorizing that, you might want to go back and think about it, right? You might want to go back and look. And remember, money is fungible. So go back and look at things that you have spent money on since you've had this EIDL loan that you know would qualify for EIDL expenses, right? These are general operating expenses. It does not include things like financing. You can't pay off long-term debt above your normal payments. You can't invest and expand your business. These are things for general working capital, payroll, operating costs, inventory, those types of things. So you would want to categorize all the things that you know would have been expenses that you could pay with EIDL here, right? And then you'll have support for where that money went. Okay. Obviously, we can't track dollar for dollar. That's not a feasible thing, but you can show exactly where your money went by demonstrating how you used it since you got the loan. So there you have it. That was the EIDL calculator and tracker. I think it's going to be super useful to you. Go get your own, jamietrell.com/EIDL tracker. It is so worth it. You are going to be able to do so much with this as far as analyzing payments and figuring out your second draw and just being so much more informed when you're making decisions about your EIDL loan. And that's what we want, right? We want to make informed decisions about our money. So go grab that, jamietrell.com/EIDL tracker. Also, I would love it if you enjoyed this video, if you would subscribe to my channel. We're really trying to grow our subscribers right now. I'm giving a lot of stimulus advice, and I have lots of other videos that will be hopefully super helpful to you, whether they are on EIDL, PPP, right? Whether it's unemployment. I have a lot of content. The ERTC, Employee Retention Tax Credit, for my business owners out there that have employees. I hope you know about this. And if you don't, I want you to go watch my video on the Employee Retention Tax Credit because it is huge, you guys. It is huge and free money. Okay, so I am going to let you guys go, but I will see you next time, and thanks for joining me.